Welcome to Hull and Estate and Succession Planning, a series of podcasts hosted by Ian Hull and Suzana Popvic-Montag. The podcast you are listening to will provide information and insights into estate planning in Canada. From the offices of Hull & Hull in Toronto, here are Ian and Suzana.
Hi, and welcome to Hull & Estate and Succession Planning. You're listening to episode 173 of our podcast on Tuesday, July 21st, 2009.
Hi, Suzana.
Hi there, Ian.
How are you doing?
Well, thank you. How are you?
Learn my lesson. I always have to ask how you're doing.
Of course, you didn't respond to my question, but anyways.
Well, I'm just always fine. Always good. It's summertime.
That's right. It's a lovely, lovely day, too.
It is. And we should be on a dock somewhere, but we're not. But we're going to continue our discussions on the family cottage to tie into the summer theme. I don't know what we'll do next summer, but we'll go to New Zealand and do like the family chalet.
That's right.
They have winter then. I just wanted to finish the joke in case you didn't catch it.
Okay. I appreciate you pointing out the fact that I missed it.
All right, so let's go to a happy spot, and that is talking about we've been talking a lot about different options and so forth on how to manage the family cottage and the transition and so on. And one of those options is a trust or an agreement where we pass it on to the next generation with a binding deal or a contract. And in our wonderful brochure, Plan Ahead, we have a whole section on this, and I thought it was worthwhile discussing that a little bit today and how to create an agreement that works for everyone. Maybe it's a bit of a lofty goal, especially when you're dealing with recreational property, because people tend to have their own views as to the importance of the property or portions of it. Some people say, I've got to always stay in the boathouse when I go, or others will say, you know what, I never even cared to go up there. That kind of thing. You don't know what the individual attachment is when you pass it down to the next generation. So the agreement has to accommodate all of these competing emotional ties. And then, of course, the financial ties. Some people need the dough, would rather liquidate and get rid of the thing and take the money and use it on their own way. So let's talk about the scenario where the property is being passed down on agreement in sort of in a friendly, consensual way. But we don't want to leave too many loose ends as to process. And one of the first things, what's one of the first things that you tend to tell your clients in terms of the structure of the agreement itself?
Well, Ian, I think really there's two alternatives that people will primarily turn to. They'll either set up a trust fund kind of arrangement where there's a trustee who's charged with a bunch of duties to maintain the situation for the benefit of the beneficiaries, or you can actually do a co-ownership agreement. And you can flesh out the terms that you'd like to see that pertain to the cottage directly in that agreement, in one of those two fashions, really.
All right, and the sort of difference really is a trust agreement is sort of a fiduciary agreement and has ties to it all the fiduciary law rules and estate and trust rules. And the co-ownership agreement is really more of a contract, something that lots of people would understand in terms of just day-to-day business transactions. It's like you signed a lease, and here are the terms of the lease, and you better leave it clean when you leave and that kind of thing. All right, so picking one of the two, and it doesn't really matter for this example, is the next one of the most important things, maybe not the next, but one of the most important things is to then create you create a pool, you pass this capital down to the next generation, or you say we're all going to share it. The first question that comes up is who's going to pay the taxes, who's going to pay the ongoing expenses, and so on. So what sort of mechanisms do you use to allow for that?
Well, we've seen a bunch of different techniques that could be used, and one of them is to actually take a pool of money and put it into a trust and say that that money is earmarked for maintenance, for repairs, for capital expenditures or improvements to the property. Or you might do it again by way of an agreement, a contract that says in certain situations this person will be responsible for the payment of, for instance, the daily, the hydro, the phone, the whatever expenses the person who's actually using the property would incur during that period of time. They could be responsible for that. When it comes to a large expenditure, for instance, for a new roof or something like that, it might be that all of the owners are somehow, in some proportionate allocation going to be responsible for those kinds of expenses.
And it's funny that the fund or the pool of money that's left behind to fund and pay for the ongoing expenses is often an afterthought when parents will pass down the cottage, but there are some of the family members just can't pay their 1/5 share or their 1/3 share of a $20,000 annual expense by the time you put the property tax in, you put the repairs and the capital, maybe throw a new roof in every once in a while. And it's sort of like, we find is it's sort of like the insurance, it's sort of like the deemed disposition tax that we pay. People don't always think ahead to that next step. And so when you create the transfer over, you may want to facilitate it on your death, for example, and say, look, I passed the cottage down to my 3 kids. They can share it equally. They're going to sign there's a co-tenancy agreement or a trust that's been established, and that trust will be funded by, say, a life insurance policy, so that you get enough capital in there to make it work.
That's right.
Because it seems to me, in some cases anyway, so often, these cottage properties don't survive another generation because of the struggle to pay for the ongoing expenses, not just running out of money on one family member or the other, but the tension that gets created.
That's right.
And if it comes out of a central fund like this, it can diffuse a lot of the pressure.
And that's especially when you think about the whole goal of doing this, is because you want to avoid exactly that kind of tension that can arise. So to the extent that you can sort of foresee or forecast those kinds of problems, and we've seen many times that it comes down to a fight over usage or proportionate usage. Well, I've only used it for so many weeks, I shouldn't have to pay an equal proportion of these expenses. And so to the extent that you can build that into your plan, it only helps, really.
Well, I think it's a really important transition tool that once you've gone to the trouble of talking it through with your family, working through the tensions that exist and the transfer and the whole transition from the parent to the next generation, when you forget that big item, you can end up creating a whole bunch of tension and a whole bunch of problems.
Absolutely.
And it can be often resolved in a contractual way. And we see them all the time with these agreements where you get very specific, like you say, identifying expenses and so on. So we've chosen to go and create this by a trust or a contract, co-tenancy agreement or co-ownership agreement. Then we've created a pool or a fund of money or a mechanism to fund it. I mean, another thing is some people say, well, I don't have any money to pay for this.
Right.
And you say, well, that's fine. The condition of the transfer is that everybody's going to agree that they're going to pour in X dollars a year into this pool of money, and you make it enough that it will be sufficient to accommodate. And if you don't want the ownership, then you don't have to pay in.
And the good thing with the fact that all of this is done while everyone's still alive is that if there does need to be some flexibility put into the whole process, there's still that possibility if it has been drafted so as to allow for that too.
And if you talk it through with your family and really work through, well, this will work this way, this one won't work this way, it can have a really important impact on the transition and facilitating the transition to make it work. All right, now we've got our options. Another important thing before we wind up this podcast today is the question of who is going to be king and what is the decision making. Yes, that's right. Good point again. What's the decision-making process going to be, and how are we going to create a decision-making process that functions, that works? I mean, is it going to be unanimous? Is it going to be, one person is in charge? Is it going to be a rotating and those kinds of things? But we can work into the trust or the more so in a co-ownership agreement, a mechanism as to decision-making.
Right, and I can see it easier, as you say, in the in the co-ownership arrangement. A little more difficult, I'd suggest, in the trust arrangement. How do you normally see that built into the process?
Well, that's the problem, because you're going to have, that comes back to who's going to be queen. Because in a trust arrangement, you've got a trustee who is ultimately responsible, so they have to take on the job of making the final decisions. You can have lots of input and transparency, but ultimately someone has to make the decision. And that's part of the decision-making tree that you're forced to impose in a trust arrangement. All right, let's talk some more about this in our next podcast, because I think that's another crucial element to any one of these agreements. And we're also going to talk a little bit about where the responsibilities are going to be assigned and things like that, and wind up our discussion a little bit on this whole question of, all right, how do we document an agreement that works for everyone?
Great. Thanks very much, Ian. I look forward to our next podcast.
Thanks, Suzana.
You have been listening to Hull and Estate and Succession Planning by Ian Hull and Suzana Popvic-Montag. The podcast that you've been listening to has been provided as an information service. It is a summary of current issues in estates and estate planning. It is not legal advice, and you're reminded to always speak with a legal professional regarding your specific circumstance. To listen to other Hull and Hull podcasts or leave any questions or comments, please visit our website at hullestatemediation.com.